Hello, everybody. Thank you for tuning into my channel. So today is a very special video. I wanted to bring all of my viewers some help regarding tax season. So by the time this video is released, it's going to be very close to tax season. So I brought in a specialist. And today we have, not Shalini,
Shalini, yeah.
Shalini. So today we have Shalini, and she is going to be sharing her secret sauce with us. So stay tuned.
Thank you for having me, and for anybody watching this, thank you for watching this presentation. It's going to be information overload. I tried to cram in everything I would want to tell a real estate agent in this presentation. So, grab your drink or whatever and sit back, and we're gonna talk about accounting and tax considerations for real estate agents. But before we do that, I just wanted to this is our agenda. So we're gonna talk about the tax system, accounting versus tax, some bookkeeping considerations, HST. We're gonna talk a little bit about write-offs and some common mistakes. But before we get into that, I just wanted to introduce myself. So my name is Shalini Dharna, and I am a chartered professional accountant. And I am also what I like to call a financial health advocate, because what I always see is people having multiple financial advisors, none of whom are talking to each other. Let me know if that sounds familiar. So you've got, a financial advisor who talks to you about how much money can you invest, and an insurance person who sold you a policy and then fell off the face of the planet. Your accountant who you see once a year and they say, sign here, okay, see you next year. And you're kind of stuck juggling everything in the middle. So at Dharna CPA, I like to say we're a doctor for all your finances, because we're going to review your current setup. We're going to review your goals, identify and implement any changes necessary, and review and update it frequently. So at Dharna CPA, that's me and my dad. My dad is both a chartered professional accountant, and both my parents are financial planners. So we offer tax and wealth strategies to entrepreneurs, because there's so much you can do and everything has a tax consequence. So instead of you trying to hope that all your financial advisors are actually working on your wealth plan, we do that for you in-house as a one-stop financial shop. And so the goal is to take all of your different financial pieces and put them together. But that's not why we're here. We're here to talk about having a business as a real estate agent. So now that back in October 1st, was it 2020? Probably the only good thing that came out of 2020 was that, real estate agents were allowed to incorporate. So I'm not going to get into too much details of what a PREC is, but what you need to understand is when you incorporate a business, you create a separate legal entity. When you have a baby, you get a birth certificate. When you incorporate, you get articles of incorporation. And you have what's called a fiduciary responsibility to make sure that the corporation is acting in best interest, doing everything that it's supposed to be doing, and the level of reporting is higher. So when you are a sole proprietorship, everything is done basically under your SIN. Regardless of whether you operate under a different name or not, you are legally responsible for everything your business does. When you incorporate, you create that separate legal entity. Its activities are separate from your activities. Regardless of your setup, you're going to want a CRA business number, and the HST rules and the payroll rules, all of that are actually the same regardless of your setup. So how do taxes work when you are a business owner? So when you worked a full-time job and you got a T-slip, basically can you see my mouse moving? I think so. You got a T4, which was reported up here under net employment earnings. When you are self-employed, we're going to take your revenues minus your expenses, so your profit, and that becomes your self-employed income. All your different sources of income get added together to get to your total income. And then if you have any other deductions, RSPs, childcare, etc., we reduce our total income to basically get to what's called our taxable income. And then whatever your marginal tax rate is, that's basically what you get charged. So this is an old chart, but basically you can see here every range of income has an a tax rate associated with it. So one of the questions I get asked a lot is, how much should I set aside for my taxes? And the answer is, it depends on where you think you're going to fall in terms of your total taxable income. So there's a magic number that people always tell me, so-and-so said 30%. And that's because if you see here, between $47,000 to roughly $91,000 of income is in that 30% range. But if you're gonna earn way more than that, 220 plus is over 53%. Now, again, these rates change every single year. So this is a 2019 table. But that's the logic that you would take when you are figuring out how much to set aside for taxes. It all depends on what tax bracket you think you're going to fall into. So when it comes to filing your business taxes, as a sole proprietor, your business activities are reported in the exact same tax return as your other personal activities. It's really important to note that that accounting and tax are actually two different sets of rules and regulations. Accounting is governed by chartered professional accountants and is the rules that we use to create the financial statements, whereas tax is governed by the CRA and it converts the accounting numbers into tax numbers to calculate how much taxes you have owing. Now, for most people, they're just concerned about how much taxes they have owing. So this presentation is going to focus on the tax rules. And for most people that watch me speak, the level of business that they're at, there's not a lot of differences. Where they are, I will identify them. So what is bookkeeping? Like what is it? What am I supposed to do with bookkeeping? Every day in your business, you are entering transactions. You have all these, you're buying things, you're taking clients out, you're networking, you're doing things to build your business. All of these things give us what we call source documents. Those receipts, those bills, the statements, that stuff you shove into the bottom of your car and hope you never need it, those are all source documents. So bookkeeping is the process of taking all of those receipts and putting it into an accounting software. Then the accountant will come in and take the numbers that the bookkeeper creates and prepare one of two reports. Internal reports, such as, your forecasting, budget to actual, and then the tax filing and compliance reports. So that is a process that we're going to do every single month. So every single month you're earning commissions, and the one thing that's really important to note is that we follow what's called the accrual basis of accounting, which means we don't recognize these transactions when the cash is exchanged, but rather when we've actually done the work. So you're going to have revenue, which then triggers an accounts receivable. You had the closing, but you haven't been paid yet. So that's an accounts receivable. You're going to have expenses that trigger an accounts payable. Maybe you went somewhere, but you haven't paid for it yet. You're going to do that. You're going to reconcile your bank, your credit card, and it's a cycle. Every single month, you're going to do the bookkeeping cycle. One of the things that often comes up with realtors is HST. Legally, once you hit 30,000 in commission, you have to register for HST. But what I've found is that a lot of brokerages, just to make it even across the board and administratively easier, start charging HST on commission from day one, which means you would have to file and register for an HST number from day one. My biggest tip when it comes to HST, put that money aside. It's not yours to spend. Put it in a separate savings account, whatever, so that you don't accidentally spend it, because at some point you're going to have to pay that to the government. And if you're late in paying for your HST, there is interest and penalties on it. So put it aside, and it's also a separate filing. It's not done with your income taxes. It's actually filed on what's called an HST remittance. But the good thing is, all of the expenses that you incur that you are being charged HST on, you get to claim that back. So let's say you earned $100 in commission or $100 in HST on your commissions, but you spent $125. You'd actually get a $25 check back. So it's a dollar for dollar return, and they will actually send you money back as opposed to just reducing your taxable income. So HST from day one actually financially tends to make sense. So CRA says that business income includes any income from any activity you do for a profit. This is going to include basically any commissions that you earn, And that's really for most real estate agents the only source of income. But if you get paid to do speaking engagements, or if you have any other side hustles, all of that gets reported as income. There's a common misconception that people think, if I don't earn $30,000 or if I don't earn X dollars, I don't have to report it on my taxes. And you have to report every single dollar you've earned, but whether or not you're going to pay taxes on it, there are something called like the basic personal exemption. So you still report it, but regardless of whether or not you've made enough to be taxed on it. One of the things that sole proprietors are often subject to is called the application of profit test. I'm not going to go into detail of what this is, but basically it's CRA trying to question whether you're actually in business to try and make a profit. And this is often something that people who put a lot of expenses through without showing any revenue or not a correlating revenue get subject to. So if you have to question whether or not you're trying to make your business work, probably aren't, right? So that's just something people get really expense happy when they start a business and they start writing anything and everything off, and just recognize that there is this audit that CRA can do. So what is an expense? What can I write off as a business owner? Regardless of whether you're a real estate owner or any other type of business owner, we all file the exact same tax return and are subject to the same rules. So CRA says that business expenses are certain costs that are reasonable for a particular type of business and that are incurred for the purposes of earning income. So the question you need to ask yourself when deciding whether or not you want to write off something is, how did this help me earn income? Or one of the questions I tell people to ask is, if you had staff, would you reimburse them for that expense? Because if it was truly a business expense that helped you earn income, you would reimburse that employee for growing your business. So that is something to take into consideration when you are writing off expenses, is whether or not it's reasonable and how did it help you earn income. In general, these are the CRA categories. As I mentioned, everybody files the exact same tax return. So these are the categories. The ones highlighted in yellow are the ones that most small business owners, including real estate agents, will incur. So my tip to you when you're doing your own bookkeeping is use these as the main categories and then use sub-accounts to track the detail levels that you need. This way, come tax time, I can take the grand total in these categories and put it into the tax return, but you still have the details that you need to run a successful real estate business. One of the questions I get asked a lot is, can I write off a home office? The conditions are, it's either your principal place of business, or you use that space and you use it on a regular and ongoing basis to meet your clients, customers, or patients. So most people do not qualify for number 2 because they're not seeing their clients at home. Where number 1 can get tricky for real estate agents is if you have a brokerage that is giving you a dedicated office space and all your mail is being sent there, and maybe you're even meeting the clients there, and part of the fees that they're charging you is for that space. So that's just something to take into consideration. But if you're part of like a virtual brokerage where there's no office space available to you, then absolutely you can claim business use of home. And how it works, it's basically a percentage, hopefully of a designated business area. If it is shared, so it's like your kitchen table or your living room, you've got a small desk in the side, you would prorate that area for how much time is spent doing business versus personal. The other question I get asked a lot is, can I write off my car? Especially as a real estate agent, you guys are driving everywhere and anywhere. So the official CRA process is what I've shown here as option 1, where you're going to take your odometer reading on January 1st and December 31st, and then you're going to keep a log of how much you've driven for business purposes. We're going to take that percentage and apply it to the following expenses: license and registration, gas and oil, insurance, interest if you're financing a car, repairs and maintenance, all of your car related expenses. We're going to take that percentage. The other option, which is not an official sole proprietorship option, but I still use it because if it's good enough for a corporation, I think it's good enough for a sole proprietor, where basically we take a look at what's called the automobile allowance rates and use that. Either option still requires a log to be maintained, and whether you do that log paper or with technology is a personal preference. So what are some considerations for realtors? So on the accounting side, you really need to manage the cash flow between when you actually make the sale and when you actually get your commission. So one of the biggest struggles that I find with my real estate clients is you're not getting paid monthly necessarily, unless you happen to have a lot of closings happening, especially in the beginning when maybe you're struggling to get clients. Managing the cash flow to survive during those periods where you don't have any closings and don't have any sales is really important. So cash flow management. And then, like I mentioned, we are required to use the accrual basis of accounting. So you need to recognize that you may pay taxes in year one, but get paid in year two. Then from a tax perspective, we want to make sure that once you start hitting that consistent income and you're becoming a higher earner, that we start doing tax planning. So you guys can now incorporate. When is that right time to incorporate? It's not a black and white answer. It very much depends on your personal situation. So that's a conversation to have on a regular basis. I find real estate agents, because you're always on the go, you tend to lose receipts a lot, or they're shoved in your car or whatever. So having a good system to at least keep the receipts. So whether that's a pouch in your car that you're going to just put all the receipts in on as you're incurring them, like whatever that system works, or you can take a picture and upload it to like an online shoebox. Find a process, and then not tracking and putting HST aside. When I do some of the HST returns and they're like, how did I owe that much? You got that money, you just spent the money. So we need to make sure that we're keeping that HST aside, right? So those are some of the considerations for realtors that we just need to have a conversation so that you know what the best way to deal with it is. So tips, you need to keep all your receipts. Photos are acceptable. So a lot of the online softwares like Receipt Bank, HubDoc, they take a picture of the receipt. Credit card and bank statements are not proof for CRA purposes. As much as possible, keep your business and your personal separate. And if you are borrowing money to put it into the business, track that, because the interest on that investment is tax deductible. And that's often missed just because clients forget how much money they've been putting in, or they're using the same credit card for business and personal. So the interest is mushed between business and personal. So as much as you can keep them separate, it will make your life easier. Real estate agents do a lot of networking. You're taking clients out a lot. Meals and entertainment, keep the itemized receipt that shows what was purchased. And pro tip, write the name and number of who you are seeing behind it, so that if CRA ever audits and said, who did you take out? You have that information as opposed to trying to remember it. But personal meals and personal entertainment are not tax deductible. Just because you were out all day showing houses and you forgot to pack a lunch doesn't mean that you get to write off that meal. Just because you had a long day and your spouse asks you, how was your day, does not mean you get to write off that meal. It again has to go back to, how did it help you earn income? And then automobile, I already mentioned that. You know, we want to make sure that you keep that log, and we use that log to claim your taxes. So what are some red flags that you should be concerned about? Discrepancies across other tax and financial forms. So as I mentioned, an HST remittance is a separate filing. The total sales that you report on your HST remittance should probably match the total sales that you report on your taxes. Being an outlier, so when we file your taxes on the small business form, we put your industry code in. So they see what everybody in that industry code is making. And if your expenses are way out of left field, or you're putting in things that categories that they don't typically see of that code, that can be an outlier. Or even, if you're saying you live in $1 million home area, but on your taxes, you're only showing like $10,000 of income, it can be an outlier, because how are you affording to live there with that income? Large business use of home, large business use of vehicle, meals and entertainment. As you can see, those are all business personal expenses being mushed. Large expenses there do trigger an audit. So once you're on your radar, you kind of stay on their radar. So, but What I always tell clients, if they're legitimate business expenses, don't be afraid of CRA. So as long as we can support that they were necessary and helped you earn your business, even if they are large, put them through. So key dates for business owners. So as a sole proprietor, your fiscal year by default is January to December. Yes, you have until June 15th to file your taxes, but if you owe any money to CRA, that payment has to be made by April 30th. And if you make more than $3,000, or if you owe more than $3,000 in income taxes, you need to make installments throughout the year, typically on the 15th of March, June, September, and December. And HST, again, you can register to file HST annually, monthly, or quarterly, but they may also ask for remittances and installments throughout the year. So that is it. That was a lot of information in one shot. And sorry, I clearly did not update this particular slide, but if you want to chat, that session is done. But I will be having Deduct this small business write-offs actually available as a webinar for on-demand purchase. I'm actually in the process of recording it right now. And what Deduct this small business write-offs is basically all those expense categories that I just listed. I go in detail of A through Z, what the criteria is, what should you be writing off. And so that will be available as a webinar shortly, available on demand download. But the contact is still correct. And if you want to book an appointment with me to just have a conversation about anything you heard, just book an appointment, DarnaCPA/appointment.
Awesome. Well, thank you so much for going over that. I know it was a lot of information, but as being entrepreneurs, as being licensed real estate professionals, we need to do a lot of this work ourselves, and we need to be well aware of it so that when tax season does come, we have the right information to pass off to the third-party professional, as you'll learn in the courses, in order to set us up for success. So thank you again so much for taking the time to explain that. And again, if you guys have any questions, just comment below. We'll get them answered. I'll also include both of our contact information below. And as you can see, we have a little bit of a different scenery today with the theme. This is in partnership with my RWT Facebook group. So that's a Facebook group that I started for Humber real estate students, just to help set you up for success in passing your exams and to hit the floor running once you actually do get your license. So thank you again for tuning in, and have a wonderful evening.